Here's a question. It says Kelly Green Corp uses the allowance method for handling receivables. And then it gives you total sales of 1.4 million. The unadjusted balance for accounts receivable was 190,000, and the allowance for doubtful accounts was a $3,800 credit balance. And then it says note situations A and C are independent of each other. So we have situation A here in the top half and situation C down here. Situation A says prepare the adjusting entry assuming Kelly Green uses the percent of sales method. And situation C, since it says these are completely independent, situation C says now assuming the same facts as above, but this time Kelly uses the percent of accounts receivable method. So this whole problem is the allowance method, but the first half up here, they're saying that Kelly Green Company uses the percent of sales method to estimate their bad debts. So A and B will be the percent of sales method. And then C and D is saying that the same company using the same facts as up here, right? Sales is 1.4 million, accounts receivable 190,000, and allowance for doubtful accounts is $3,800 credit. But now the company is using the percent of accounts receivable method, and they're wanting you to do the adjusting journal entry for both methods, and they're wanting you to show what the balance sheet would look like after the adjustment is made. And it says, hint, remember to post your adjusting entry. So I've got a problem here that's very similar. It says at December 31st, Lexington Corp's accounts prior to any adjustments show the following balances. So this is the same thing as what the problem was saying. The problem just said that these are the unadjusted balances. This is the same thing. So Lexington Corp has sales of $1,850,000. They have accounts receivable of $173,400, and they have an allowance for doubtful accounts of $3,200 credit balance. And situation A says that Lexington Corp uses the allowance method to account for receivables, and they estimate uncollectibles to be 1.5% of sales. And if you scroll down, again, situation B is completely independent, and now they're saying use the same exact information as above, right? Use the same unadjusted figures, but now assume that Lexington Corp uses the percent of accounts receivable method. Again, both of them are using the allowance method. It's just one is using the percent of sales and one is using the percent of accounts receivable. So again, as soon as we see that the company is using the allowance method, you could go ahead and fill in the accounts that you're going to debit and credit, because we know that when we're using the allowance method, we're going to be making this adjusting journal entry to debit bad debt expense and credit the allowance for doubtful accounts, always. Okay, so under both methods, I could actually go ahead and fill that in because they both say they're using the allowance method. So anytime you see that the company is using the allowance method to account for receivables or to account for bad debt, or they're estimating uncollectibles or they're estimating bad debts, you know that you're automatically going to be debiting bad debt expense and crediting the allowance for doubtful accounts. And so now we just have to figure out the amount. So in order to figure out the amount, we have to look at how they're estimating the bad debts. And it says they're estimating it based on 1.5% of sales. So we're using the percent of sales method. So we know that we need the sales number, and we know that we need this percentage. And in order to calculate the journal entry amount, it's just going to be the sales figure of $1,850,000 times the percentage that they gave us, 1.5%. And let me pull my calculator up. 1,850,000 times 0.015, because that's 1.5% converted to decimal, right? 0.015. That gives me $27,750. So that's what my journal entry amount is going to be under the percent of sales. $27,750. Okay. So the percent of sales method is really easy. You just take your sales times the percentage they give you, and that is your journal entry amount. The second part of this says now they want you to show what your accounts receivable and your allowance for doubtful accounts how they will appear on the balance sheet after this adjusting journal entry is posted. Remember, these are your unadjusted balances. This is an adjusting journal entry. And so accounts receivable was not affected in our adjustment, right? We didn't debit or credit accounts receivable, so that balance there didn't change. We can go ahead and bring that balance down, 173.4. Okay, but our allowance for doubtful accounts balance did change. Okay, we had $3,200 credit balance, and we just credited $27,750 more. So this part is not in my open math. This is something you're going to have to do separately on a separate piece of paper so that you can figure out what your new adjusted allowance balance is. The first thing you have to do is bring over your beginning unadjusted balance, right? It was a $3,200 credit balance, and credits always go on the right-hand side of the T account. And I just credited the allowance for doubtful accounts $27,750 more. So since I've got two credits here, all I've got to do is add these together to come up with what my new balance is. So my new adjusted balance is $30,950. My adjusted balance is what should go on my balance sheet. And so that's the amount I'm going to bring down here, $30,950. That's my new balance, my allowance for doubtful accounts. And then to figure out what your net realizable value of accounts receivable is, you just subtract the two, because your allowance for doubtful accounts has a credit balance and your accounts receivable has a normal debit balance. These two will be netted together or subtracted to come up with what we actually think we'll collect in cash from these accounts receivable. So this is what it would appear, how it would appear on the balance sheet. Accounts receivable is $173,400. That's the amount customers actually owe us. We are estimating that of that $173,400, $30,950 will be uncollectible. And this is just an estimate. We don't know for sure who it is that's going to be uncollectible, but based on our past experience, this is the number that we've come up with. And so when I subtract the two, the $142,450 is what I actually expect to collect in cash. We didn't post the bad debt expense because we didn't need it for this, but we might as well go ahead and post it. That didn't give us a beginning balance, so we can assume our beginning balance is 0, and you're always going to put your expense balances on the debit side or the left-hand side of the T account because expenses carry a normal debit balance. So the dash means 0 in Excel. And I debited $27,750, so my new balance, 0 plus $27,750, is obviously $27,750. Okay, so that's the percent of sales method for this Lexington Corp. Now, if you scroll down, it says the same exact scenario, but now Lexington Corp uses the allowance method to account for accounts receivable, and they're estimating uncollectible accounts to be 6% of accounts receivable. Instead of the top one said they estimated at 1.5% of sales. So now we're using the percent of receivables method, but we're still using the allowance method. So again, I can come right down and automatically know that my journal entry, I'm going to be debiting bad debt expense, and I'm going to be crediting my allowance for doubtful accounts. And you know your debits always come first in journal entries, and your credits always come second. So that's why I've written them that way. And again, use the allowance method. Bam, I already know debit bad debt expense, credit the allowance for doubtful accounts. So now I need to calculate my journal entry amount. And with the percent of accounts receivable, it's a little bit different. Remember, percent of sales, all we needed was the sales and the percentage. But with accounts receivable, I need the accounts receivable balance because now we're estimating our bad debts based off our accounts receivable balance and not sales. So I need the $173,400 times the percentage that they gave us, right? 6%. And let's go ahead and do that in the calculator. 173,400 times 0.06, because 6% converted to a decimal is 0.06. That gives me $10,400. But with this, I'm sorry, 404, right? Let me put my calculator back up. 10,404. But with the percent of accounts receivable method, this is not my journal entry amount. This is what I want my allowance balance to be after this adjustment is posted. And so now I need one more number with the percent of accounts receivable balance. I need to know what my allowance for doubtful accounts balance is right now before this adjustment is made. So if we scroll back up, you can see that the unadjusted allowance for doubtful accounts balance is a $3,200 credit balance. So since it's a credit balance, I have to subtract it from the number that I just came up with, this $10,400. If this had been a debit balance, I would be adding it to the $10,404. But it says it's a credit balance, so credit balance gets subtracted to come up with the journal entry amount. So again, let's pull up our calculator. $10,404 minus the $3,200 credit balance gives me $7,204. That's going to be my journal entry amount under the percent of receivables method. Okay, so percent of sales is just sales times the percentage that they give you, but percent of accounts receivable is going to be your accounts receivable balance times the percentage, and then you also have to know, do you have a debit balance or a credit balance in the allowance for doubtful accounts? If it's a credit balance already, then you subtract that to come up with your journal entry amount. If it's a debit balance, then you add it to come up with your journal entry amount. And then you just plug that into your journal entry. So now we have to, again, tell them what your accounts receivable calculation would look like on your balance sheet. And to calculate net realizable value, that's what you're going to put on the balance sheet. It's your accounts receivable less your allowance for doubtful accounts. That gives you how much you're actually expecting to collect in cash. So again, with accounts receivable, even though we're using the percent of accounts receivable method to estimate our bad debts, the journal entry did not affect the accounts receivable balance, right? I didn't debit accounts receivable. I didn't credit accounts receivable. So my accounts receivable balance is going to be unchanged. So I can scroll up here and get the same balance that I had. This was my unadjusted number, and my adjustment didn't affect this balance, so I can bring that down, 173,400. But now I have to figure out what is my allowance for doubtful accounts balance after this adjustment is made, because I did affect the allowance for doubtful accounts balance. So I need to go here and I need to plug in what my unadjusted balance was. And if you scroll back up, you can see I have an unadjusted balance of $3,200. So I need to plug that in. And during my adjusting journal entry, I credited $7,204 more. And again, the credits always go on the right-hand side of the T account. Debits always go on the left-hand side. And since both of these are credits, I can just add them together to come up with my new balance. 3,200 plus 7,204 gives me a new adjusted balance of $10,404. So that's the balance that's going to go on my balance sheet. The adjusted balances are always the ones that you use in your financial statements. And so now to figure out my net realizable value, I just subtract these two, because remember, this one has a debit balance, accounts receivable carries a normal debit balance, and the allowance for doubtful accounts carries a normal credit balance. So when you net these two together, you just have to subtract them. 173,400 minus the 10,400. So my net accounts receivable balance should be 162,996. That's the amount that I expect to collect if I'm using the percent of receivables method to estimate my bad debts. One other thing I wanted to point out is notice my ending adjusting balance, my allowance for doubtful accounts, 10,404. That number should sound familiar, because remember, I was telling you that with the percent of accounts receivable method, when you take the accounts receivables balance, the unadjusted balance, and you multiply it times that percentage, that 6% that they gave you, when you multiply these two, the number you come up with is the amount that you want in your allowance account after the adjusting journal entry has been posted. So this 10,404 should always agree with the amount that you come up with after you've posted the journal entry, the adjusted balance. Okay, if it doesn't, you've done something wrong. And then the bad debt expense, again, we can post it if you want to, but you really don't have to. This is all they're asking for in my math. This part of it is done on a separate piece of paper, on a scratch paper. This is not going to be keyed into my math, but you have to do the calculation in order to be able to do this part. Okay, bad debt expense didn't have a balance, but we just debited it 7,204, and so my new adjusted balance on my income statement is going to be 7,204. Okay.